TCS among top Nifty losers today after it reports an earnings miss for the fourth quarter. Both dollar revenue and margins below estimates, but management tells CNBC-TV18 they were anticipating a constant currency growth of 1.5% to 2% at the beginning of the quarter, ended with 0.6% on account of uncertainty, especially from the BFSI segment.
An earnings miss from TCS sparks off a sell-off in tech stocks. For the second day, Tech Mahindra, HCL Tech, Infosys, all of them are down. Close to around 1.5% to around 2%. All eyes now on Infosys' quarter 4 numbers due later today.
AU Small Finance Bank, on the other hand, up almost 15% as the RBI has approved the reappointment of Sanjay Agarwal as the MD and CEO of the company for 3 years. Additionally, on account of that, a lot of equity has been changed. 0.5% equity worth nearly 213 crores on the exchanges in a large trade.
ONGC and Oil India, they trade higher after crude prices touch 5-month highs overnight. Additionally, the ONGC management tells CNBC-TV18 that the recently imposed ceiling on gas prices will not have an impact on the company, as the new wells will see higher prices and there will be more production of new wells. Hello and welcome to Chartbusters. I'm Nigel D'Souza and joining me as always is Mangala Malu. Well, as we speak, the Nifty, we have recovered. We're trading more or less flattish. And today, both the pillars of the markets are moving in different directions. So tech is down, but the bank Nifty is doing pretty well. Let's get in our technical expert. Sachidanand Utekar joins us. Hi, Sachi. Morning. Give us your trade on the index. How do you approach the Nifty as well as the Nifty bank?
I think Nifty is already squeezed in within its previous day's swing range. So until unless we don't see a breakout, probably the chances of momentum look bleak. On the higher side, we are still expecting a swing towards 17,855, and probably the floor which we are seeing right now at 17,750, that this particular floor may not be breached on a closing basis. So probably the expiry could shape up somewhere close to 17,800, 17,850 on the higher side of this particular range. When it comes to Bank Nifty, I think the data is still more confident until unless we don't see Bank Nifty slipping below that 41,650 mark. We are not seeing any signs of change in momentum. So probably the expiry could shape up somewhere close to 41,900, 42,000. So we expect this particular outperformance to continue. So what we have done is we have already recommended a particular trade to our clients via the Bank Nifty options. We are expecting the move to unlock towards 42,000, and that's why we have recommended buying 41,600 call option, which is placed somewhere close to around 165 right now. The stop loss should be placed at around 70, and we are expecting a move towards 355.
It's interesting where we're poised, Sachi. The Nifty Bank is right at the 100-day moving average. This is a level that a lot of the street were believing that could be a bit of a resistance. But if the Nifty Bank as a lead indicator, stays above that 100-day moving average, doors perhaps open for the Nifty to go there as well, which is closer to the 17,900 mark, 17,880 thereabouts. You're speaking about the two pillars, Nigel, the IT index and the Nifty Bank. I'm just looking at a couple of other support points that would come by. One would be Reliance, which is sitting with a gain of almost 0.2%. Reliance is virtually at the higher end of today's trading range. And the second is the FMCG pack, which was under a wee bit of pressure yesterday. But now the FMCG index is at the high point of trade, led by HUL and Britannia itself. On Britannia, the stock is up 1.5%, but remember, optically, it's just 1.5%. Today, it went ex-dividend by 72 rupees as well. So if you add that back, the stock is actually up by almost 3% odd. So those are a bunch of stocks which are doing well. Sachi, your individual stock ideas for this morning?
Good morning, Mangalam. Mangalam, I think FMCG pack is definitely outperforming today. We've already seen good short covering moves led by Britannia and HUL. But if you look at the data of Dabur, which was scaling lower, right now what we have observed is fresh long positions. The floor at around 520, I think this particular floor may not be breached. So probably a trading swing back to its 20-week exponential moving average is likely, and the reward to risk is very beautifully placed. I think long positions can be deployed here in Dabur. Stop loss should be placed at around 519 on a closing basis, and we are expecting a swing back towards a 540, 544 kind of a zone. The second stock that is on our radar is Bajaj Finance. If you look at the structure, there's a good classic, higher top, higher bottom sequence. For the last 3 trading sessions, we have seen some consolidation here. If you look at the candlestick formation, this looks like a rising 3 formation with a base well placed somewhere close to 5800. The stop loss should be placed at 5830 when it comes to futures. We are expecting a positional swing towards 6130. So probably this will be one of the stocks which may lead Bank Nifty also further.
All right, Bajaj Finance not a part of the Nifty Bank, but Nifty Financial Index could be supported by that. Thank you, Sachi, for joining in. He likes Dabur. It will be interesting to see how Dabur and HUL pan out in the near future, mainly because the IMD has said that the monsoons will be normal. And Dabur and HUL most important because as a percentage of sales in the FMCG pack, Dabur has the highest revenue that comes in from rural India. And in terms of absolute sales, HUL is the one which gets its highest sales from rural India. So HUL will be around 35-40 odd % of their overall sales, whereas Dabur is 50%, but HUL's base is much larger. So in the FMCG pack, HUL and Dabur, that could tell you what takes place in rural India.
All right. Well, thanks for that, Manglam. Well, let's get to our first corporate on the show, though. Anand Rathi, they reported muted growth in Q4 results. They missed the AUM growth guidance by close to 2,000 crores. To help us understand what went on in the past quarter and the way ahead, we're joined by Mr. Feroz Aziz, the Deputy CEO of Anand Rathi Wealth. Hi, Feroz. Good morning. Thanks so much for joining in. Well, you missed your AUM target that you had set and you had revised it midway through the year. But the street still likes your numbers. But tell us first, why did that AUM number miss? What transpired between Jan to March that resulted in this 2,000 crore miss?
Nigel, it's 1,000 crore miss. We had said 40,000 crores on a consolidated basis. So we ended at 38,993. So that's 1,007 crore miss. If you look at 31st December, which is when we had revised in the last quarter, we had revised it to 40,000 crores from 39,000 crores. Nifty was at 18,100. And when we closed the year, it was 17,300. Since Nifty was about 4% down, when we give a AUM guidance, because AUM is generally a one-shot 31st March value, and it's not an aggregate of a specific period, you are subject to the closing of the 31st March. When we give a guidance, we assume that the Nifty would be at the same levels, which was not the case. Is why that miss. But you'll be happy to know that we had a great amount of net mobilization. We had a growth of 40% in the new monies we brought in. Of course, the dampened market ate away the benefit of the new money momentarily because AUM is a picture, not a movie.
Right. Take that point. It's a picture, not a movie. But Feroz, your net inflows in the fourth quarter, they were slower by almost 5 odd %, roughly 1,200 odd crores, 1,180 crores to be precise. First up, could you split that into how much of that was equity, how much of that was debt, how much of that was MLDs, and will the budget's announcement impact the MLD MLD inflows going forward? What was your experience in March?
Manglam, let me break your question into 2 parts. One is the 5% fall in the net mobilization for the last quarter. 4-5% here or there depends on the reinvestment. If somebody wants to realign his money, so that's not a significant change. But you'd be again happy to note that our equity mutual fund net mobilization, which I think is the most important variable, because that's where our trail comes from. Debt funds don't give us too much trail. Equity funds do. You'd be happy to note that in the last quarter, we almost got 900 to 1,000 crores net flow in equity mutual fund. The industry overall, other than SIPs, full year lost 15,000 crores of net negative in the equity mutual funds. We did 2,500 crores positive, out of which 1,000 crores of equity net mobilization came in the last quarter. Yes, we had a 4-5% lower, like you rightly pointed out. But I think there sometimes what happens is clients redeem at a specific period. They couldn't reinvest before March 31st. And these kind of numbers. But happy to note that equity mutual fund net mobilization was 1,000 crores almost for the quarter.
I mean, I'm just looking at a trend. A couple of quarters ago, this quarterly run rate was 750 to 800 odd crores. That over the last 4 quarters has increased to over 1,000 crores, closer to 1,200, 1,300 crores as well. Do we see this structurally move to around 1,500 to 2,000 crores at some point?
Yes, Mangalam, we are putting in our best professionally to move this number to 2,000 crores a quarter, or at least 1,700 crores a quarter. And I think we should be successful. We're using very different strategies to put the acceleration on the net flows, which is very important. But you should note that unlike most wealth management outfits, we don't like to collect assets to look bigger. You would see the liquid funds as a proportion of our AUM will be negligible. In most other wealth management outfits, it can be 25-30%. In our case, it will be 2%. Because we don't like to have tax-free bonds in our demat account to show ourselves bigger. We count those assets which are meaningful, which give the true picture, rather than make us look optically a little bigger. So AUM has very stringent methods of definition internally for us.
Feroz, because of the budget change, have you seen money being taken out of MLD?
No, Nigel, sir, it's not changed because in MLDs, as you Section 50AA, which now encompasses debt funds as well, any instrument which does not take risk is what has got included in 50AA. Now, debt funds which have 35% equity are also not included. So basically, crux of the 50AA section is if you're not taking any risk, don't take the benefit of long-term capital gain and indexation. All the MLDs Anand Rathi has ever issued in the last 10.5 years, almost about 1,200 of them which have matured and 1,600 which are still to mature, not even one is a principal protected MLD. Our belief is that if you're doing an MLD, then do it for the right reason. So if you're getting into an instrument which is linked to Nifty, have some protection, not fully protected. So all our instruments are non-principal protected, hence they don't come under the umbrella of 50A. We are opined that way. Of course, people have to take their own opinions, but we are...
Okay, got it. Thanks for clarifying that, Feroz. Let's focus on a couple of other aspects then. Your active client families, that's surged up to around 8,300. Good growth is what you delivered in the past year as well. What's the target for FY24? If you could tell us on that, point number one. And point number two, Feroz, I need to give this to you. I think when you came out with the IPO, you were talking about a net profit number for the, I think, of around 152 crores. You have delivered a number of close to around 168 crores. So good on that. Now you're talking about 205 crores. Upside risk to that as well?
Nigel, sir, our belief is that we have to professionally give conservative numbers. Generally, in IPOs, you want to be even more careful because you don't want to overstate your numbers. So 152, we've done 168. Of course, the year was not so mundane. It was quite exciting, Ukraine war and the US inflation. But again, we have tried to give a guidance of almost about 21-22% on the PAT growth. That makes it 205. We will try our best to achieve it and maybe supersede it marginally at least. So that's on. If God is kind, we'll be able to achieve that.
All right. And you want to give us the number about your active client families as well from this 8,300? Where does it go?
Nigel, when we look at gross family additions, we are looking at 2,500 crores of new clients added. But what happens is we take it on a net basis. If there is some client who slips below 50 lakhs because of mark-to-market effect, we count them out. So 2,500 crores of gross addition and at least a 20% growth on the net basis.
All right. So that explains why perhaps your clients were lower in the second half of FY23 as well, because they slipped perhaps below that 50 lakh mandate, the net clients that we're talking about. Recently the SEBI launched an AIF to launch direct plan schemes. Will there be any impact on your wealth management business because of it?
No, Mangalam, it will have no impact because in 2013, when mutual funds had the direct alternative, we believed that going the advisory way will require all products to be having direct. And that's when a wealth management outfit can choose to between distribution and advisory efficiently. So after that, there have been about 8-10 circulars on advisory. We have not had to change our business model, point one. Point two, AIFs, in our belief, at least long-only AIFs for which upfronts have also been curtailed or capped or made zero. I think long-only AIFs is something which we never recommend, or we've never recommended an AIF so far. So when at a point in time when we recommend an AIF, it will be for the right reason, saying that there is no other vehicle which can do what that AIF can do, because it's alternate investment fund. People put stocks in it and give a name of alternate, because all stocks are a very, very commonly found instrument. So To answer your pointed question, no impact because no AIF sale currently. Not that we are averse to that platform, but a platform has to be used if no other platform can provide you an asset mix of that nature.
All right, and final point, you said that you'll try to marginally outbeat your net profit guidance of 205 crores to Nigel. Your revenue guidance, you've given 18% for this year, AUM guidance of 21%. I presume that you will try to outbeat that as well?
Yes, Mangalam, we will do our best to achieve that number. And we would like to believe that it's not a very aggressive number, but it's encompasses different situations possible.
All right, Firoz, thank you so much for joining in and laying out those numbers for us. Your viewers and investors will be happy to know your guidance. With that, we'll sip into a short break, come back on the other side. We'll get you more on the markets and individual stocks.
Yes, 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 yes. Quiet! It's okay for us to nod for everything. Because we are parrots. But your wealth manager? Shouldn't be doing that. You know? No? Oh.
Choose Nuvama. We only do what's right for you and your money. Nuvama. Let's do it right.
15% प्रॉफिट पक्का
18.75
कैसे
ऐसे
आपके बिजनेस की तरक्की के लिए टाटा ट्रक्स लाए हैं फ्लीट एज ऐप। अब फ्यूल एफिशिएंसी, ट्रिप मैनेजमेंट, ट्रक की हेल्थ, सेफ पार्किंग जोन, रूट प्लानिंग और बहुत सारी फ्लीट मैनेजमेंट आपके हाथों में। अब बिजनेस बढ़ेगा तेजी से। टाटा ट्रक्स, देश के ट्रक्स।
क्या नानू?
व्हाट
हर महीने नया इंटरेस्ट, लास्ट मंथ पॉटरी, इस मंथ डीजे।
अरे यार, अगर हर महीने इंटरेस्ट मिलता रहे तो हर महीने कुछ इंटरेस्टिंग होना चाहिए कि नहीं? क्योंकि मेरा बैंक जो है वो मेरी तरह, सॉरी तुम्हारी तरह है, यंग एंड फ्रेंडली।
आपकी तरह।
हमारी प्रार्थना होगी स्वीकार। Zedlock Premium Agarbatti and Dhoop, official prayer partner, Delhi Capitals.
इक्विटी में इन्वेस्ट कर, ग्रोथ का है चांस।
डेट में है लो रिस्क, बात मेरी मान।
गोल्ड सिर्फ गोल्ड, भैया ने भी यही किया।
सुन सबकी, कर मल्टी, मतलब मल्टी एसेट एलोकेशन फंड, यानी 3-in-1 फंड। ये इक्विटी, डेट, गोल्ड तीनों में एक साथ इन्वेस्ट करें। म्यूचुअल फंड निवेश बाजार जोखिमों के अधीन है। योजना से जुड़े सभी दस्तावेज ध्यान पूर्वक पढ़ें।
Welcome back. Well, the markets have slipped a little bit. I don't think any cause of worry, but we have moved lower actually in the last few minutes. So clearly at around that 17,800, we're seeing some bit of supply that's creeping in there. And the initial dip was bought earlier today, but now we're seeing some kind of selling. L&T, that's a stock that's moved to the low point of the day. Keep an eye out on that one. Infosys, the street is bracing for a rather weak set of numbers, even post the recent underperformance. So let's keep an eye out on that one. A couple of those heavyweights moving lower, which is pulling down the Nifty as we speak. But a good time to move to our special segment where we get you a few ideas for profit from Money Control Pro. Bharat Janani of moneycontrol.com joins us to talk about a stock that is tracking closely. Bharat, what do you have for us?
Today's ideas would be Metro Brands Limited. The company is on track for aggressive store expansion, given the strong long-term demand factors such as increase in the income levels, as well as shift from the unorganized to the organized space. The company opened about 100 stores in the first 9 months of FY23 and is on track to achieve the guidance of 260 new store openings over the next few years. The company is currently present in about 165 cities and aims to reach about 300 cities over the next few years. The company is premiumizing its product portfolio. In fact, the recent launch of FitFlop brand was very well received by the consumers. The company is also enhancing the share of the online business as well as the accessories business, both of which currently contribute about 10% of the overall revenues. With the acquisition of the Fila and the Proline brands, the company has filled a key gap in its product portfolio, that is the sports and the athleisure wear, footwear as well as the accessories. The company is in the process of integrating both the companies into its own operation and aims to take the profitability of them at the current level of Metro Brands. At the current market price, the stock is trading at a PE of 51 times FY24 projected earnings. Investors can add the stock in the book.
All right, that's about Metro Brands. Just keep an eye on a couple of these mid-cap IT names. Nigel alluded to a lot of the large-cap IT names not doing too well. We have LTI Mindtree, which is down 4%, the top F&O loser right now. In fact, among the top F&O losers, the mid-cap IT names are more prominent. We have Persistent Systems down by about 3.5% as well, and Birlasoft is another stock which is down by 2%. So IT stocks falling all the way and mid-cap IT falling even more. With that, we'll slip into a short break, come back at you more on the markets and individual stocks.
पिछले 6 सालों से हर रोज यही हो रहा है। ये वो SIP है जो चौधरी साहब अपनी बेटी के लिए कर रहे हैं। जब जिंदगी जीने का तरीका ही SIP है, तो जिंदगी के लिए SIP क्यों ना हो?
An investor education initiative by HDFC Mutual Fund. Mutual Fund निवेश बाजार के जोखिमों के अधीन है। योजना से जुड़े सभी दस्तावेजों को ध्यान से पढ़ें।
Let's you and me step out and see how blue the sky, how tall the trees. Let's you and I step out to find how far we go, how deep the sea.
With a 5-star global NCAP rating, Škoda Kushaq and Slavia are India's safest family cars.
बारिश, धूप और धूल से आपके घर को सालों साल बचाए। ड्यूलक्स वेदरशील्ड पावर फ्लेक्स, घर का चैंपियन।
We are all different, but our soul is the same. We go wherever life takes us. We go for friendship and spur of the moment trips. We go with the flow, with our instincts, and with the ones who always have our back. We go wherever life takes us, and we do it in our own way, because it's our differences that make us who we are.
अभी तक मटेरियल आए नहीं?
पैसे नहीं है।
अच्छा।
यूग्रो कैपिटल का ग्रोएक्स ऐप है ना, अब आपको भी मिल सकती है नॉन स्टॉप बिजनेस करने की आजादी।
इतनी जल्दी?
Let's get talking consumption. My colleague Shilpa Ranipeta spoke with Harsh Mariwala, the chairman of Marico, on the sidelines of the Sharp Summit and spoke about the rural consumption demand. Let's listen in.
Many of the entrepreneurs say that, okay, now I built this business, let me sell it to an FMCG company which already has a distribution network, and there is no extra cost to distributing these products. So there is going to be some, and which has already happened. Marico has acquired three businesses, many other companies have acquired. So I see the trend continuing in terms of opportunity for acquisition.
But do you believe that it is viable to stay only on as an online business? Is it important, not just important, is it necessary that you have to be able to also go offline at some point, or do you think it's sustainable to stay online?
I mean, all depends on the kind of business you are and the kind of offerings you have. But if there is a potential for you to leverage it offline,
right?
Offline.
Offline.
Then I think if you don't do it, somebody else will do it.
So what do you make of the current consumer sentiment though overall? We've seen some companies flagging an improvement. What is your sense? Do you think unseasonal rains, heat wave will continue to have an impact, or are we seeing a recovery?
So I think if you look at FMCG businesses, not online businesses, I think we have seen a certain degree of stress, because especially in rural areas. And rural demand has fallen, and to some extent the monsoon helps if it is a normal monsoon. Inflation coming under control would also help. So one is hoping that things would come back to better business environment in rural areas in the coming months.
But if the heat wave continues, do you think that will delay the rural recovery?
To some extent there will be an impact of weather, so I'm not able to judge. I think it's just not the heat wave or the weather, but other things also in terms of the rainfall, the pattern of rainfall, the overall inflationary impact, and a lot of it is driven by the fuel prices internationally. So one would have to look at the overall picture, but there will be some impact.
All right, well, on that note, though, we'll have to wrap up on this edition of Chartbusters. You stay with us though. Trading Hour comes up next.